Hey everyone, this is Mikas, and this is going to be this week's weekly higher time frame update video. So if you haven't seen the last two videos, be sure to check them out as they will set a lot of important context for where we go in today's video and what we will be talking about in today's video, since this one will be kind of building off of the last two. So if you really want to be able to follow along, make sure to check those out. As you know, they'll kind of set the context for what we're going to be talking about today. Today's kind of video is going to be following the same sort of structure. Firstly, we're going to take a look at the daily chart on Bitcoin, kind of orient ourselves as to where we are in the situation, or kind of this sort of trade plan or kind of market scenario that we laid out in the first video. And then we'll, kind of hop into some alternate indices, namely, the equity, the S&P 500. We're going to look at the equity market, the traditional market, whatever you want to call it, as well as the dollar from kind of the Forex world, see how that might inform our bias in Bitcoin because of the, direct relationship with kind of the equity market that we've seen, and the inverse relationship we've seen with the dollar market, and how that might influence this scenario in Bitcoin that we've talked about. And then, we're going to kind of take a look at an economic calendar, because it's very important to kind of keep track of important fundamental events that might kind of rock, mostly the equity market, because I'm more so of a swing trader. Obviously, there's a lot of fundamental analysis you can do within the crypto space itself. However, I mostly only trade Bitcoin, maybe a little bit of Ethereum, but mostly Bitcoin. I don't really step outside of like the top 10 majors, top 10 by market cap. But yeah, that's essentially going to do it. Oh yeah, and then of course, finally, we kind of, proposed a trade in, not the first video, but the last video, which, we actually took over at Onward BTC. I posted it for the group. And we did manage to hit two of three entries, so we scaled in with about 66% of our position, which is more than enough to make some decent profit. So we'll do kind of a quick check-in with that position, and kind of what is the trade plan looking like now, right? Like how do we move forward with that? So yeah, that's kind of a a very quick summary and overview of what we're going to be talking about today. So, without further ado, let's, dive right on into it. So, in the first video, to quickly summarize, we were talking about how for a best case scenario, obviously there's a lot of scenarios that can play out from here, but a best case scenario in the context of being a bullish scenario, some kind of double bottom structure would be nice here before it, and not before, only if we want to see kind of a more kind of macro bullish reversal, right? So there's no guarantee that this is actually what's going to happen, but until we see where this low falls, it is a possibility. And from my experience trading Bitcoin, these kind of double bottom structures are relatively common for a little bit more of a macro. This is still a medium term, time frame going into kind of the end of this year. This is not looking multiple years out. This is only looking at a couple months out, so this is still a relatively medium time frame. So if we wanted a medium term kind of relief rally, I would be more confident in trying to either spot buy more Bitcoin or looking for some kind of swing longs, if we do kind of confirm a double bottom structure. And that's just from my own experience, really trading Bitcoin over a few years. But that's not the focus of today's video. Like I said in last time's video, we're not really trying to catch this bottom yet. We'll worry about this bottom once we get some kind of bottoming signal or structure. And where we are today is nowhere close to that. I don't want to say we're in free fall, but we did get a very kind of strong impulsive move to the downside, which so far has not really shown a sign of reversal at all. So once again, in last time's video, we were kind of talking about different ways to confirm a local top, which we managed to do, and we did manage to get entries exactly as we spoke about and as we planned off of that 21 and the 55 EMA on the daily. And if you entered a short, congratulations, that's probably hit a couple of your targets already. And now we're gonna have a look at what might happen further. I think in last time's video we also discussed the a couple different possibilities for a pullback. We talked about a shallow retracement, a clean double bottom retracement, or an equal retracement, or an extended retracement. So that's kind of where we're going to go with today's video. We're going to be checking in with some of the alternate indices, because in last time's video as well, this is why it's so important to check out the other videos. And I'm just trying to set some context in case you haven't seen the previous videos. We looked at the indices, namely the S&P 500 and the dollar, to kind of set some conditions in which we could decide, or not decide, it could inform us if this was to be a shallow retracement versus maybe a slightly deeper retracement. So that's what we're going to be doing in today's video, is we're going to be checking in with these indices to kind of continue to inform ourselves, or try and get a better idea if this is going to be more so of a shallow retracement, or if it could be a little bit deeper of a retracement. And if you are in those shorts, then a signal for either closing out your shorts here and kind of trying to maximize your profit, or kind of like lean towards holding your short for the opportunity for a little bit more downside. So that's kind of what today's video should be informing us. And that's kind of, how I'm going to be taking today's video, or presenting the information in today's video. This is the information that I'm going to be using for myself, is do I continue holding my short, or do I close out my short, is essentially what I'm going to be trying to convey or figure out. So yeah, just not spending too much time on this chart. Obviously, we kind of hit our first kind of macro support zone, obviously close to that kind of bullish 0.382. This is on a very macro extension, back from all the way over there. So it's a pretty significant kind of level, all the way to kind of the macro top that we had at all-time highs. So, this is a relatively significant bullish retracement, and then which kind of coincides with some like previous analysis that I'm not really going to go back, because I'll have to zoom out pretty far. However, I had identified this as kind of like a macro buy zone previously, and it actually did act as strong support. And now we are kind of testing the top of that macro kind of support zone. So it kind of makes sense that there's a little bit of relief. But essentially, this was kind of the first stopping, the kind of relief area that we described in a more so of a shallow retracement situation. So now, we're going to take a look, we're going to dive into the S&P and then the dollar to see, how are those behaving. Actually, we could do that right now. I have no more context. So again, in last time's video, we said that, S&P kind of rejected off of this macro 200 simple moving average. We had overcome kind of this macro, at one point acting as support, resistance here area. So we said that, a back test would be important to see if it was confirmed as support again, or if it might flip resistance. And as we can see, we did not get a confirmed support retest. We actually fell through this macro level, and it is now acting as, it was tested today as resistance. We'll have a look at the economic calendar moving forward to see, if there's any events that could possibly kind of push us back over it, because that's what happened back here, is we had really good inflation news. So not really good, but we had decent inflation news, which pushed us above it. And caused a little bit of a rally in Bitcoin as well. I think it was this latter rally that we saw in Bitcoin. So, we don't want to get tricked by that again. So we'll have a look at the calendar, see if anything like that could happen. However, our kind of scenario, or the condition that we talked about last time when we were looking at the S&P 500 chart, was if this was a successful retest of this resistance flipped support now, then we would have expected more so of a shallower retracement on Bitcoin, right? So if that retest was successful, then, S&P would have, likely probably acted bullish in the short term, maybe another take of the 200 simple moving average, which, might have caused us to, pump, higher, or at least to equal highs on Bitcoin. However, that is not what we saw, right? We saw a break down below that, and now it's acting as resistance, meaning from an equities perspective, I am now leaning more so towards I'm not going to call it an extended retracement, but a deeper retracement than what we are seeing currently. I think we're getting a little bit of relief in the market right now. We're getting a little bit of sideways action. However, I do not think this is necessarily the end of this down kind of move, or this most local swing to the downside. And until the S&P can break back above this kind of, well, now it's resistance again, this resistance zone, I want to say odds for the S&P or the equity markets are to the downside. And following our one-to-one relationship between the equity market and Bitcoin, this means that my net bias for Bitcoin is also going to be to the downside, potentially lower into this buy zone, maybe equal lows at around 19.2 or, 20K at least. So lower. That is the bias that the S&P market is kind of telling me. We're going to have a quick look at futures. In futures, daily's closing in 16 minutes. We are also kind of cleanly breaking below these kind of, resistances that we kind of faked out above, and bias is also looking to the downside on the futures market. So that is what the equity markets are kind of telling us. Same kind of deal on the NASDAQ. We did confirm kind of a local top. Same kind of deal here. The Dow Jones as well, kind of all biased to the downside. Yeah, it's going to be the same story across the board. Now quickly looking at the dollar. So now when we move to the dollar, we have to remember that this has an inverse relationship to Bitcoin, or tends to have an inverse relationship to Bitcoin. We talked about kind of a break into this pseudo kind of trend line support area, and we did get an extension past it. We did move beyond our kind of most conservative goal, and this is, I'm not a big believer in trend lines. That's why I say pseudo trend lines. But we did get a breakout above it, and it looks like we are getting a retest of this trend line, which means we could potentially see bullish continuation, to the upside. Upside potential is always unlimited, so this is a very inaccurate, or this is not necessarily a good number to be looking at. The one thing that I would be interested in seeing here is, because we are technically setting a higher high on price action, is if we have, so we do have lower highs on oscillators, right? So we have a lower high on the RSI, which is kind of indicating bearish divergence. And then do we have it on the MACD as well? Not necessarily. So, okay, this is something to keep in mind or keep an eye on, because if we do confirm a local high, so something similar to here where we get a reversal bar and then the following candle closes below the wick low of the reversal candle, that would confirm a local top. And if we do confirm bearish divergence on the oscillator as well, then I would be inclined to, call a little bit of a short-term reversal on the dollar, which would, have bullish, kind of have a bullish result on Bitcoin. But until then, until this is confirmed, bias is still to the upside on the dollar, meaning that bias is continuing to be to the downside on Bitcoin. So we have 2 points of confluence now. We have the equity market breaking below, below support, or an unsuccessful retest of a resistance as support, which is now going to be acting as resistance again. So that's bearish bias. And then we're getting kind of continued bullish bias on the dollar until we can kind of see a confirmation of a local top. So, other markets are still kind of pointing to a continuation to the downside on Bitcoin. So that'll be interesting. My bias is still to the downside here, and this kind of gives me enough confidence to continue holding my short. I don't think, obviously, how do I want to do this? Okay, we'll go into trade management here in a second, but what I think is important to cover is an economic calendar here. So let's have a look, because this relates to the equity market, right? And the equity market, a lot is driven by fundamental analysis. That's how a lot of, traditional kind of more so New York Stock Exchange, equity driven traders, they do a lot of fundamental analysis. That's mostly how investing works. Investing like leans pretty heavy on fundamental analysis and stuff like that. So keeping track, and I'm not a big fundamental nerd, but the most important kind of thing is to keep track of major events, because major news events can cause, at least bring volatility into the market, either to the upside or to the downside. So just kind of having an idea of when volatility might enter the market can help you manage your expectations so you're not completely caught off guard. And if it's not necessarily a surprise that volatility is entering the market, then that's, one less major emotion to really worry about. So kind of just having, keeping an eye on things, having an idea of when things might happen is always a good idea, because once again, surprise is a very strong emotion, and it can be, you can be surprised in a good way a lot of times, but you can also be surprised in a bad way a lot of times. So I like having kind of my expectations set. So yeah, let's have a look at this economic calendar. Once again, the economic calendar is mostly going to affect the equity market directly, and depending on the news, it can also have an effect on the dollar, which, by their respective relationships has an impact on Bitcoin. So yeah, let's have a look. So what's today? Today's the 23rd, tomorrow's the 24th. Not really any major events. I mean, some of these, they say they're high importance events, right? Because they've historically sparked market volatility, but it really depends what sector you're trading. So like, for example, durable good orders is probably not going to, it could, have a lot of impact in a certain sector of the equity market, but it's not necessarily going to have, market-wide consequences. And those are the events you have to kind of learn to pull apart through experience, is really identifying the events that might have market-wide consequences. See, so nothing really important happening tomorrow, which is Wednesday. So the 25th is Thursday. Okay, so GDP growth rate. GDP represents, essentially is a measure of a country's, gross domestic product. It's a countrywide measure. So this might have market-wide consequences. So this is definitely something to keep track of. This is on the 25th, so on Thursday. Our forecast is negative 0.8%. Previously, we posted negative 1.6%. So anything greater than this on the negative side would be kind of bad news. It would probably drag the market a little bit down. Whereas anything, less than this in terms of, being closer to zero or more positive could have a potential, positive effect on the market. So it's also about interpreting these events. And it all has to do about forecasts and expectations. Jobless claims, so employment, this historically has also had an impact, or it can have a market-wide impact. So another event to kind of keep an eye on, or at least expect, and this is again on August 25th, so Thursday, 8:30 a.m. So this is pre-market actually, so it'll be important to watch the futures market. And this is where we had that kind of inflation news come through, was also on the futures market. So, that can have profound effects on the trading day. Yeah, jobless claims. Okay, so 25th, decent day to keep, kind of maybe potentially expect some volatility. Other than that, yeah, no, these are all low events. Core PCE price index. I mean, decent thing to kind of keep track on. Not necessarily market wide. It could have some impact. Oh, but this is the major thing. Yeah. Okay, no. So August 26th. So that's what? The 26th is Friday. Okay. Friday, Fed Chair Powell speech. So traditionally, this has had, a high consequence market wide, because the Fed chair, especially in a time of kind of, hyperinflation as we've been having, he's usually talking about kind of the interest rate hikes, right? So, this is going to be interesting to see how he's leaning. Is he leaning towards, still kind of imposing a higher interest rate hike, or is he potentially looking to kind of loosen those up? So this is a very significant event to keep track of. 10 a.m. So this is during regular market hours on the 26th on Friday. So Thursday and Friday, so end of this week, we could expect some volatility. Yeah, and this is already next week. So Thursday, Friday, right? Yeah, so bias is kind of to the downside, and we'll see, if we can get kind of, some good news that might cause us a little bit of a short-term reversal, to kind of try and test this resistance, maybe break through it again. But, odds are if it's bad news, then there isn't really any support holding us up. So that might cause, kind of a more sharp sell-off, because we don't have any short-term support here really. So if the news is bad, I would expect a volatile move to the downside. However, if the news is, not bad or kind of decent, then it is maybe possible we get, a shallow kind of little bit of a pump to try and test this resistance again and see if we can break through it. But Thursday and Friday are definitely days to kind of keep in mind for volatility in case anything happens. However, my bias does not change. From a technical perspective, bias is still to the downside. Okay, so before this video becomes too long, let's do a quick overview of kind of our trade plan. This is what we presented in last week's video. Is entry on a back test of that 21.55 daily EMA. Or you could have used these kind of levels. I used these levels. We hit 2 of the levels out of 3, so we entered for 66% of the position. I set a stop loss somewhere up here above kind of, a major liquidity pool. And then we took profits kind of along the way. The first profit at 22.6K was secured very fast. So 1, 2, 3 of my profits were kind of secured. And there's 3 more profits that I'm looking to kind of take. And this coincides more so with that equal bottom scenario here. So, at 20.2, 19.6, and 18.9. In terms of trade plan here, I'm taking equal profits at all of these. And I think I'm leaving. No, I think I'm going to close out if we get this low. There's no point in kind of holding for a runner position. In terms of my stop loss, though, I have moved my stop loss to entry, just because our entry is now protected by both the 21 and the 55 EMA, which were our entry conditions for the trade. So those are protected now by that. So it is relatively safe to kind of move your stop loss to entry and take kind of any and all risk off the table. So this is now a position completely in profit, which is good for us. And, based off of our analysis today and what we learned today, is we are going to continue to hold the short. There's no reason for us to close out. Bias on the equity market is still to the downside. Bias on the dollar market is still to the upside. We have major kind of fundamental news events coming on Thursday and Friday, which traditionally have led to, kind of more so downside movements, because we are kind of in this, inkling of a recession or time of recession. And even then, if the news is less bad than everyone expects, we are protected by kind of these major entry condition or our entry conditions. So it is worth taking the risk and kind of holding this position. In mind that we've closed about half of the position already at these entry levels, right? We've taken 3 profits. We still have 3 profits to take. So, we've reduced our position size by about 50%. We've moved stop loss to entry. Risk is off the table. Other markets and other biases are telling us further downside is a real possibility. So therefore, continuing to hold our position is the move here. Thank you very much. That kind of does it for today's video. Make sure to join our group on Discord if you want to, discuss these or ask any questions. And yeah, I hope this was helpful, and I'll see you in the next one.